All right, good morning, everybody. We are working with a short week, and so far everything looks pretty good. We've got the gap closed on the ES. We've already tapped the ADR. Uh, I know that this is a phrase that's still unusual for newer traders to grasp, but when there's low volume, markets can really move. Some of the biggest moves we've ever seen in market history came from low volume. So when we have a short week, when everybody's sitting out because they're waiting on something, and when it's time for contract changes, all these different known periods in history where we go with a low volume and a low volatility, uh, that's usually where the greatest volatility tends to come in. It won't take much to move the market. Spot Gamma has not came out with their AM edition yet, but if you went through the PM edition, they talked about the JP Morgan collar and a false call wall and a tactical call wall. So it's worth reading so that you don't just mark, whatever the false wall is. Their argument was that it was it won by default just because there wasn't very much uh, put positioning there, but there was a better one. So read the founder's note, kind of get an idea where to mark. Look at what's going on around the world. Japan down 0.25% with small caps. The Dow is basically flat with Hong Kong, the S&P. NASDAQ is up nearly 0.5%. So we run the gamut in both directions. We're going to get some auctions today at 1 o'clock. We have the 2-year note. I've said it before, if we have auctions at any time, 11, 11:30, or 1, just assume that those other two time frames are going to have auctions as well. I know it might not make sense. Just look for that volatility to come in. So watch the clock. It's free. Everybody's got one. 11, 11:30, 1 o'clock. We can see listed that we have 11:30 and 1 o'clock auctions. Just go out on a limb and assume there's going to be an auction at 11. It does sound like they averted a government shutdown, so we have that off of the table. And they've already started talking about a third rate cut after taking two off. There's been talk of putting one back on. So the market kind of stabilized from both of those two things. One, we got the government keeping the lights on and the trains running. And on the other side of that, they have capitulated and increased the discussion on an extra cut. So 3 cuts. It's not 4, but it's not as bad as what the market had started to price in either. I mentioned we had closed the gap. This is where we closed on Friday. This is where we opened on Sunday night. We ran up. We got to the ADR half, dropped back down, got the gap closed. Now what? Well, what we talk about a lot of times is if we can close this gap early enough, we can hit this ADR early enough that we can go to the other side. We've solved the gap. That's not a problem. and we've hit the ADR, so we're done with that. That does put 59.71 on the table. Not because I'm bearish, not because, there's some reason to believe we're going to go down, other than if we get to one side early enough, we can go to the other side by the end of the day. There's a statistic that's worth keeping in mind just because of its frustrations. No matter how bullish we are at 9:30, no matter how bearish we are, no matter how bad it's been in the overnight, how good, between 9:30 and 10, the markets can completely change direction and go the other way with a 50% chance. That's a coin shot. A 50% chance that no matter how good or how bad it was, between 9:30 and 10, we can change direction and go the other way. So just kind of keep that number in mind, because hopefully it will alleviate this idea that we got it all figured out, right? That we always know what's going to happen. We don't. We read the signs, we play what we have with a high degree of certainty. Otherwise, we wouldn't do it in the first place. But at the end of the day, it can swap directions no matter what. So at this point, we don't even have a good double bottom. And in fact, we've formed more of like an inverse cup and handle than anything else. But we would still need to get back down to that 88 zone and see how it's going to help us or not. And now that we've popped up off of this low, we really need to keep that low. Otherwise, we're setting up for a really beautiful downtrend. Today's floor pivot channel is inside of Friday's channel. The pivot today is opened higher than yesterday's. That's slightly bullish. Price opened above it. That's also bullish. But we've got an 80% chance that we're going to hit that purple line. 80% of the time, markets hit their floor pivot. So at the moment, we have an MDP. That's a missed daily pivot. And if we come back down and break this low and this gap that we have closed, then that's the target. Now, on the one hand, I mean, that's a layup trade. That's nice and easy. I'll take it. But it'll feed into the negative bias and the move to the downside. We'll want to start focusing on Friday's range. You can use all of Friday or just start with the RTH of Friday. If you use the regular trading hours, 59.75, it's just above that floor pivot. So call it a halfback play with an overshot into the floor pivot. We reverse there, and we can stabilize, hold the line, and run to the upside. But if we break that half and we break that floor pivot, didn't have it quite lined up. There we go. Break that half, break the floor pivot. We got to consider that we can make the whole move. So if we do measure all of Friday, we can see 59.58 is the halfback. It's the lower edge of that channel. I love how everything just comes together. If you didn't know how to measure yesterday's range and you were just using these central pivots, well, the pivot itself is the RTH halfback, and the channel's bottom is all of yesterday's halfback. Doesn't get much better than that. They just overlap and line up. Confluence is the word you're looking for. So if we lose that, I think it's game on, and we can test Friday's lows, 58.66. It's 120, 115 points away. Come on, you know you want that. I'll take it, but I'd rather have a bullish play since, we're all lined up for everything else to be bullish. On the week, we've got this other pivot in play, and that's this floor pivot at 6008 or 9. That's the week's floor pivot. Generally speaking, the ES likes to stay above its weekly floor pivot. If we get underneath it, we want to look for bearish opportunities, and if we get above it, we want to look for bullish opportunities. But it's a big picture concept. Obviously, it's not support or resistance. We've cut through it already, and it didn't even slow us down. It's more of just a bias of where we're at, right? When you look out the window, you don't know how hot or cold it is. You can just see if the sun is shining, if it's raining or not, snow on the ground. Well, this weekly pivot, it's not offering you a trade, right? It's not giving you the temperature. It's giving you just a little bit of context, some bias. So short opportunities when we're underneath it, long opportunities when we're above it. Not complicated. $61.25. No, 61.32 cog line. Imagine that. Last week's point of control is on a cog line. Confluence. It all just lines up. We're sitting in a tight holding pattern this morning at 61.31 cog line down here, or at least the ADR value area high. 61.31, 60.31. It's 100 points difference between those two. So if we can get through this value area high at 60.31, and we can get through Friday's high, then we have this point of control from last week. It's a 100-point move right there. We still have that 58.20 point of control way down here. But that should not come into play unless we break those halfbacks that we were talking about. And then we would have to break Friday's low, and then this would be on the table. If you're fishing around for a lottery ticket or maybe a really cheap butterfly that, is like a binary trade, win or lose, get one on $2 or $3, and I'm talking 2 or 3, pennies. You buy a butterfly for 3 cents. And then if it doesn't work, who cares? You're out $3, $2. I wouldn't put a trade down there if it's going to risk hundreds of dollars because it just isn't worth it. Same trade on the other side, targeting something like 61.32 cog line, putting something on up there just in case we run in that direction. Something really cheap that if you're wrong, you don't care. So the put wall and the 10-week moving average are on top of each other, and just above that is the lower ADR. See if we can do this. So we were looking at those channels and we were talking about today's floor pivots and how the floor pivot of yesterday lines up with the half back of yesterday. All right, all of this sort of lining this out really well. Well, let's add to this 59.71 floor pivot that we were talking about and point out that it's the put wall, the 10-week moving average, the ADR half, and it's the floor pivot. That's a lot of structure down there. I don't see any reason that we're going to break all of that structure down there unless we get some really negative news. Right? Like it would take a lot. It would have to surprise the markets, be really negative, and just drive us to the downside with no upside flows at all. One-time framing, single directional push. It would be a cascade event, and I just don't see any reason for it. So, it's going to be something that we're not looking for, not looking at. It's certainly nothing in our economic agenda for today. It'll have to be shock and awe, surprise. So 59.62, the 10-week, the put wall, the ADR half, and the floor pivot all lined up. If we cut below 59.50 just to have a nice simple round number to work with, then I think it's going to get real ugly real fast because we would not have any support or structure or help or anything. We're already underneath the zero gamma and the volatility trigger, which puts us in a bad spot. We're underneath the 10-day, the 20-day, the 3-week. If they're going to come in and play save-a-ho, they need to hurry up and do it. To be fair, they don't owe us anything, and we could just sit here sideways into the end of the day. We could just chop about from the midpoint of yesterday to the high of yesterday, and we just stay in that zone and chop. Maybe wick out above a little bit, wick down below, and not do a darn thing. So it doesn't owe us anything. So, be mindful that it doesn't have to go anywhere today. This is the cumulative volume index, and it doesn't matter what I have up top here because it's not looking at it, right? We could have the ES there. We could have anything, Caterpillar. It doesn't matter. It won't change what we're looking at down in this lower section, right? So what we're looking at in this lower section is the cumulative volume on the NASDAQ. So generally, we look at it with like the NQ, the QQQ, INDX, but since the ES and the NASDAQ correlate well together, I normally just leave it on the ES. Look at this bullishness, right? I mean, it's completely outside the Bollinger Bands. It's pointed almost straight up. It looks like a meme stock. And it's certainly divergent against something like the Qs, which had a down week last week. And this is on a weekly, but we can flip it to a daily. On the daily, we're all the way back up to the top of the price range, testing against the Bollinger Bands for another shot at a breakout opportunity. While price hasn't even made it back up to the top of the range, and forget about any chance of a breakout at this point. So the idea that we could stay bullish or that we could get a Santa Claus rally or that it isn't done yet. Yeah, it's not done yet. There's still a lot of flows coming in. I was looking at the options flow from last week, and there's just a lot of flow still, a lot of flow. But we are starting to synchronize, and that's when markets can make some crazy wild moves. All right, we talked about how the profile was likely to be cleaned up as we got into the new year, or into the, excuse me, into the new week, where my mind is at. This distribution up here is what we're going to lose a little bit at a time. And this distribution here is what is going to grow while we stay in this zone. So unless we cut the line and come back up into this area, we're going to lose this point of control at some point. It's going to shift down. That's if we don't go back up there. Otherwise, 59.50 is starting to line up as the new point of control. For each new candle that we're going to get on the right, we will lose one off of the left. And since we're losing candles in this zone, we're going to see this green shape start going that way. So while it looks like a classic P-shape profile, it won't as we get more distributive. All right, we took out one of the VPOCs. This is from Thursday. Friday, we ran up and ran right through it like seriously, like it wasn't there. And now it's gone. We could take it and put it on today's price, but we've already cut through that level multiple times, and so it wouldn't be a VPOC. I've mentioned this before, but there's always new people joining. If you study a volume profile in the textbooks, they're going to tell you to carry these forward. This is the value area low, the value area high, and the point of control, right? Carry them into today's price action. Because if we go up, we go down, we hit those levels, price is very likely going to respond to it, right? And at the very least, the point of control is where the greatest amount of trading took place yesterday. You gotta believe that if we go back to where the most people traded yesterday, that some of those people are going to have buyer's remorse, trader's remorse, that we'll see a lot of trading activity again. So you don't even have to make an assumption of, is it support? Is it resistance? You know, is it going to hold us up, reject? It's just an area where there's expected to be a lot of trading activity. And we could reject, we could break out. Probably want to know where that location is so that you don't try to trade right underneath it, right above it. You know, you at least factor it into what you're looking at. Now, I've got enough pivots. I don't need more, so I don't mark them out. That doesn't mean you shouldn't or you couldn't. And it's worth learning about these profiles. TPO is the blue one. Volume profile is the green one. I know they look very much alike, but there is a difference. It doesn't hurt, right? So it looks like our weekly expected move is back to normal again, at least as normal as it can be on a short week. This thing inherently has issues with a short week. We already know it has issues with contract changes. It's just the way it is. You can always double check to make sure that these numbers at least appear to be accurate. You can use the Thinkorswim, go back, look at what it was over the weekend, hand draw the lines yourself. If you're looking at it on something other than the ES, say SPY, SPX, QQQ, Apple, whatever, probably not an issue anyways. It looks good. I'll check it tomorrow once we have that Thinkorswim's think back so that we can validate it, check to make sure. Pretty sure when I was looking at it Friday afternoon, which doesn't count because we weren't closed yet, it was 86 points higher or lower, I believe was the. I slept since then, so don't quote me on it. Yeah, it's like 107 now. So 86 seems a bit light. That's the wrong one anyways. We need Friday. Missed a day. 88. If it was 86 and now it's 88, yeah, that's more closer to what I remember it being. But that also implies that it hasn't degraded or faded any since Friday. That'd be a bit of a shock because it should have. So 6,100 or 5,900. Some nice round numbers. We're less than 1% above the 10-week. From where we were just looking, it seemed a little closer to me than that. But we are still above it. It wouldn't hurt to get a reset off of it if we're thinking about the new year and maintaining this bullish bias. It seems like the one thing that everybody's talking about is the same thing that they've been talking about for the last 4 months. Oh, the rally is going to broaden out. It's going to broaden out. I'm sure you've probably even heard me say that. It looks like it's broadening out, and then it just stays concentrated. And when we do get a rotation, it just seems to target more of the same, right? It's utilities, that's AI. Chips, yeah, no, that's AI. Bitcoin, yeah, no, that's AI. AI, yeah, no, that's AI. So everybody's still looking for this broadening rally, growth versus value into something that lifts all boats, right? That rising tide. I'm still not seeing it, but that's the conversation that is out there right now. And if take government shutdown off the table, we're getting another cut added to the conversation. As long as we don't get some negative event data, then the Santa rally is at least possible. You know, the other day it was looking like it was nearly impossible with a shutdown looming and everything else, but at least now there's at least a possibility of it happening. Whether or not we get it is completely different. I've already started seeing people take some really big risk. Guys, don't put a ton of money at risk for a Santa Claus rally. I'm not saying don't trade it, but this isn't like a high certainty trade, right? High conviction. That's the word I was looking for. A Santa Claus rally is not a high conviction trade. So that old phrase about know what you own and be completely aware of the risk. Yeah, there's no kidding with this one. And if you're wrong and you're playing options for the Santa Claus rally, if you're wrong, those options are going to get stripped crazy fast. They will get completely annihilated with absolutely no chance of saving them or salvaging them. Just keep that in mind. You won't be able to redeem them. So things that are down this morning, Bitcoin, gold miners, volatility. I'll take it. Real estate, energy, staples, retail, banking, financials. My goodness. Just flip this around and try it from the other way. What's up this morning? What's up? Chips, NASDAQ volatility, the MAG 7, more chips, nat gas. That's a joke. Yeah. So we've got chips and the MAG 7, which is consumer discretionary, financials, technology, communications. So we're back to the crowded trade where 8 to 10 names are going to carry the market. And if they get a cold or they decide they don't want to work today, then the market isn't going to work today. forced concentration into a very narrow complex. What can go wrong? So it says solar's down, but we're just seeing a little algo print here. We're not really getting flows down there. Uranium also down this morning. That's actually got some flows behind it. We haven't turned up yet, and that morning star reversal just didn't work. Crude also down this morning, holding underneath that year-to-date anchor to VWAP, but we are getting that rising wedge shape look to it, right? It's not a true rising wedge. It's just we're getting those higher lows and really capped out against that anchor to VWAP. It's possible it could pop. If this thing actually pops, we could get up to 78 and maybe challenge 80, but there's no reason that it should, right? Other than, oh, risks and fears, right? There's some talk about grain shipments getting hijacked and I don't know, there's a little bit of drama going on in the Middle East that could spike crude, give this a shot above that 74. But I mean, if you're going to run crude, USO probably isn't the way you want to go anyways. That's weird. So oil refiners using the crack ETF is up 6.25, and agriculture is up 5.25. Uh, I don't even know what to do with that. Just note it, and I'll circle back on that one later. Pot stocks, you don't want a market rally on solar and pot stocks. Finally, we get into chips with SMH and then some banks. And some retail. Retail, we saw some pretty good retail in the last 2 weeks. Certainly didn't account for that bleed off that the whole market really had, this included. Now it's stuck. It's got to get through that half and get back up again. It's looking good so far. This morning being up, but it's got a long ways to go. That was a damaging move, to say the least. Hey, kitty, kitty. So keep your eye on the clock. Those auctions seem to be the last threat that we have on the day. You already got the levels. Really watch for that halfback and the floor pivot. I think it's going to get ugly if we get underneath those. It's the 10-week, it's the floor pivot, it's the put wall, it's everything all rolled up into one. If we can hold, we could try to test the highs, but at this point, sideways seems to be the base case argument. Be careful, be safe. If you're traveling, there's supposed to be record numbers of travelers this year for the holidays, so you won't be alone. But be careful. I won't be here tomorrow. I will see you all on Thursday. And have a good holiday.